Hello, welcome to our webinar on Saudi Arabia Vision 2030. We're going to speak about the diversification, if it's achievable and at what price. So I'm Mufteeva. I'm a CEEMEA economist at Natixis CIB Research. Let me introduce my colleagues who are going to speak with me today. So we'll have Joe Hancock, who is in charge of commodities, and in particular energy, everything oil and gas, and who's going to start to speak about the transition strategy of Saudi Arabia in terms of the oil market, or in the context of the oil market. Then for my part, I'm going to speak from the macro perspective. So what is the Vision 2030 plan? How it's actually happening? What are the programs included? What are the challenges, and what are the successful parts? And finally, Bouchra Rhajbal, who is our financial institutions analyst, is going to touch a word on a financial system under Vision 2030 and how is it actually helping to finance growth and finance transformation of the country, all the projects of transformation of the country to a more modern economy. So let me pass the floor to Joe now.
Yes, thank you, Ina, and hello, everybody. So what I wanted to do to start is talk about the oil market context for Vision 2030, both from a historical basis and the long term. So one question we receive quite frequently on this topic is, well, is Vision 2030 a response to the broader narrative around the energy transition, and within that envelope, projections for peak oil demand at some point in the 2030s and going forwards? Our answer to that is actually 70% no and maybe 30% yes. And the one thing that we always point to is that Vision 2030 at its heart is really the kind of latest in a long line of economic diversification plans put forward by Saudi Arabia, the first of which was in 1970. And so aside from the broader narrative around the energy transition, the main kind of driving factors of this transition plan, really the undesirable macro dynamics that we generally see in commodity exporting economies. So some examples, the macro volatility of revenue to oil prices, given the fact that government spend is one of the key drivers of GDP, the fact that oil reserves are at their heart exhaustible, and also the fact that the oil sector ultimately employs a low number of people in a country that has a lot of young graduates joining the labour force. So where we do see some difference is the scale of ambition embedded within Vision 2030, and my colleagues are going to talk about this in great depth. And ultimately, detaching and unmooring the performance of Saudi GDP to oil prices, reducing that fiscal break-even price, it is one of the key drivers. But the one point that we would make is that this transition or economic diversification is not necessarily just linked to the broader energy transition, and is kind of a long-seated ambition of the Saudi government. So if we could move to the next slide. And here is where we talk about that kind of long-term oil market context, because whilst the energy transition isn't the main driver, it's clearly important in driving Saudi decision making. And the one thing that we would say, and the one thing we've noted over the past year, is that in the long-term oil market context, Saudi Arabia and big, large state oil producers generally are facing a much more nuanced long-term macro oil environment. So we've shifted from the peak doom and gloom 2020, 2021 period, where the main conversations for the oil industry were surrounding divestment, to some kind of green shoots on the longer term oil outlook. So we could probably typify the kind of prior period with the no new oil and gas drilling call from the IEA, mainly driven by projections or negative projections on the demand side. So Chinese demand growth clearly slowing down. We can see on the chart on the left-hand side that demand growth in China has by far been the most important macro factor within the oil markets, and that electrification of China has clearly weighed on the demand side. But on a go-forward basis, I think we now have a broader kind of appreciation of the fact that in the post-2022 Russian invasion of Ukraine environment, the energy security point of the energy trilemma is also pretty important. We've also seen kind of a new appreciation that the electrification of the Chinese energy economy, which has been pursued for various reasons, but one of the main ones being geoeconomic, may not be a model that's followed in other markets, and we can see that with contrasting electric vehicle sales. Now, the latest long-term IEA report was focused on decline rates of legacy upstream production and the fact that new investment in capacity is likely to be needed to effectively meet oil demand in the next kind of 10 to 20 years or so, given the relatively steep decline rates. And ultimately, when it does come to peak oil, whilst we do see this peak occurring at some point in the 2030s, we are likely to plateau on the long term. And so what this suggests is that although we definitely see a slowdown in oil demand growth in the coming decades, oil will continue to play a part in the global energy economy, and there is room in that energy balance for oil going forwards. And as we'll discuss on the next slide, Saudi is relatively well positioned in that environment. So the next question, I suppose, that we receive from clients quite frequently in regards to Vision 2030 is, well, does this mean that Saudi is moving away from oil as a key component of the economy? And the answer is a resounding no. It's still going to maintain this critical place, and mainly due to the geological endowment. So that's relatively or very high quality reserves, a relatively low carbon intensity, which is becoming more important in developed markets, developed demand markets, but ultimately the low cost of production. So Saudi, a very large volume of oil right at the base of the global cost curve, occupying a very privileged place in the global oil market. So whilst IR is presenting a relatively nuanced view of that kind of long-term oil outlook, even in the worst case scenario, so if we did see a very kind of fast transition in some of the key demand growth markets going forwards, or if new supplies were brought online, Saudi would still be relatively insulated from this and would still be able to put a substantial volume of barrels into the market. And we also need to think in terms of the importance of oil to the Saudi economy beyond, or the Saudi state, beyond just the revenue perspective. So the kind of large volume of global production gives Saudi market power, but it's the concentration of that production into one company and the decision to hold a significant portion of that capacity offline that can be deployed in response to market events. So really market management via OPEC is what I'm referring to here, gives Saudi a lot of geopolitical clout. And we can really think about this in simple terms, in terms of Saudi conducting central bank operations to keep the oil market relatively balanced between the interests of producers and consumers. And so beyond just the revenue perspective, this broader spare capacity angle also provides a lot of benefits for the Saudi state. So even in the context of Vision 2030, we are expecting to see oil play a key role in the Saudi economy going forwards. And I'll just move on to the next slide, where broadly this is kind of linking some of the long-term oil market dynamics that we may see to the success or not of Vision 2030. So I mentioned Saudi's market management policies, holding a significant chunk of capacity offline in order to keep the market relatively balanced. Now, this we can kind of broadly view as a response to, you know, the social contract within Saudi Arabia of intergenerational fairness to spread oil revenues out into kind of future decades. Now, if, for example, we were to see a full kind of economic diversification, a much lower leverage to oil prices of the Saudi economy, we may see a change in Saudi's long-term market strategy, because although, you know, that the current strategy does you know, maintain reserves for the long term, it strikes a good price between the interests of producers and consumers. What it does is it sets the oil price at a price level far above the cash cost of production of some of the major producers, and allows competing suppliers into the market. I think the most obvious example of this would be the shale revolution, which was, you know, kind of unfurled on the global market by crude prices above $100 per barrel in the pre-2014 period. So if, for example, we did see a broad success of Vision 2030 from a kind of broader oil market angle, if Saudi were instead to decide to, you know, chase monetization of these reserves, given the kind of reliance or lower reliance on a high oil price, it could have major oil market impacts and kind of push some of these competing producers that are higher up the cost curve out of the market, and really you know, accelerate Saudi's capture of market share and put oil prices on a much more structurally low trajectory. So I'm very happy to leave it there and pass back to Ina for the next section. Sorry, Ina, I think you're just on mute there.
Yeah, sorry, I was on mute, forgot to remove the mute. Yeah, thank you, Joe. So what I take from your presentation is that oil will definitely remain relevant, and contrary to quite a common view that Saudi Arabia is planning to diversify out of the oil sector, in fact, it's just going to reduce the importance of oil for its economy. So diversify in the broad term of the world, knowing that the privileged position that it keeps in the market will probably make it keep producing and make it the marginal producer, or as Joe likes to say, the last one who will stop producing oil in the world. I'm going to speak about a bit different matter, although oil will definitely be a bit of a red line of what we're going to speak about. So we're going to speak about some details of the Vision 2030. So what is it exactly? How is it happening right now? We are a bit more than halfway through, and are there any successes that we could probably mention, and are there any challenges, and will they finally make it or not? What could we say about that? So let me change the slide. Yeah. Well, let's just start from reminding you the general framework of Vision 2030. In 2016, the Crown Prince Mohammed bin Salman, MBS, was also famous as MBS, announced a huge program of transformation, of the profound transformation of the Saudi society and economy through a set of reforms, innovations, and all types of changes and modifications, including some modernization of the society, etc. So we'll probably just to mention the major principle on which he based his Vision 2030 is that they acknowledge the need to increase the role of the private sector in the economy, because the government obviously takes quite a lion's share for now of all the activities, be it exports, which are at 80% basically the oil exports, or a more general metric, the GDP. So government plays a little bit, probably too much of a role in the economy, crowding out some private companies, and this needs to change. Definitely there is a need for more competitive labor force. Well, you need to enlarge the labor force first, because in fact there's a big part of the population, women, who were practically excluded from the job market. You need to amend the education system, which up to recently was based on religious education and definitely not delivering the skills that are needed for employees in a more modern economy. The government services need also to keep up with that pace and modernize, digitalize, and accelerate their processes. And it won't be possible without the general opening up of the society, which was finally the first step that he undertook, that MBS undertook while realizing his plan. And probably, well, last but not least, the role of the international investment and the role of the let's say international scene for Saudi Arabia. So role of the Saudi Arabia on the international scene through soft power, but also through investment, needs to be boosted. So if we look at how they organized this Vision 2030, basically they defined three main pillars or themes of the plan. So one theme is about the economy, to make it thrive. One theme, that also includes some measures to on the job market, basically to increase the employment and also the productivity. Then we have the vibrant society. So this is more for improving basically the quality of life of the local population, and promoting a national identity of Saudi nation. And finally, what they call an ambitious nation. In fact, it's here that they're going to speak about the effectiveness of the government, how to improve it, about the business social responsibility, and all kind of subjects like that. And the funny part is that the most famous, probably, side of the Vision 2030, the giga projects, are not even in those three pillars. In fact, it's something really apart that indeed was probably the most mediatized and advertised and launched with a lot of media attention. But those giga projects are finally only a part of the whole and quite comprehensive overhaul of the Saudi Arabian society and economy. So let's move to just to explain you how they organize the realization of such a large-scale plan. Obviously, it's really hard to put in place all sorts of reform at the same moment. So they created different, let's say, vehicles through which they're going to put in place this Vision 2030 framework. So first, they introduced the Vision Realization Programs, the VRPs, what they call the implementation vehicles. So there were 13 of them. Some of them emerged in the course of the years. Well, they introduced them in 2017, so just 1 year after they introduced the Vision 2013 in general. And in the course of those years, there was a transformation of the list. But basically, there are 10 that you see on the left-hand part of the screen now that are still staying in the latest report, which dates from April 2025, published in April 2025, about the intermediary results of Vision 2030. So you can probably see the public investment fund program. So this is about the funding, and we'll go back to it a bit later. You have the human capability development program. So everything about the skill development, everything about the vocational training. You have the housing program, which also was quite a success, as we're going to see it in some metrics. Well, a little bit more contradictory, probably, the privatization program or national industry development, and we're going to speak about it also in a while, why it was not probably a full success yet. And another, finally, let's say, third perspective, at which you can look at this delivery mode of Vision 2030, or second, if it's just about the delivery. It's more industry oriented goals. So they call them national strategies. Obviously, there is some overlap sometimes between the pillars and the objectives that are subscribed under those pillars, between the vision realization progress and national strategies. Anyway, everything is linked, but here we see probably a bit better what are the industries where Saudi Arabia putting a particular emphasis in terms of development. Well, I'm not going to cite all of them, but you could probably I would just cite one, which is a labor market strategy. So because we're going to speak about this, let's say, particular case in a couple of minutes. So if I go back to the three pillars, just as a reminder, the one on the economy, the one on the ambitious nation, so effective government, social responsibility, and the one of the vibrant society, about quality of life, and also promoting the image of Saudi nation. So those three pillars, they are also divided in a number of objectives. There are quite many of them. I didn't put all of them in the tables. And Saudi government is publishing yearly reports on the annual reports on the accomplishment stage on each and every of this objective, on each and every of this program, and it's very interesting reading to see how they actually approach this or that objective. And sometimes there are no metrics. Obviously, something about vibrant society. In the vibrant society part, metrics are probably a bit more difficult to find than in the part on growing and diversifying economy. But this is probably the part that will interest us most. And as you see in this table, a little bit dense, I know, but those little rounds under, when they are full black or almost black, meaning they are close to completion. When they're full white, they haven't even started or even deteriorated. So sometimes the metrics got deteriorated since 2016. So clearly not getting any closer to the targets established by the government. And when they are quarter or half full, well, basically they're just midway. And as you can see, there's no, let's say, so I don't know, homogeneity in the way the metrics are progressing. So some of them are already achieved. On some of the metrics, they even had to take a bit more ambitious target, and we're going to speak about it in a second, giving you a couple of examples, especially in the labor market. In terms of the housing program, they also revised their metrics and a couple of other things. On other metrics, when it's full white, for example, the contribution to the GDP of the small and medium-sized enterprises, unfortunately, stagnated and didn't show any progress. And on certain of them, the progress is clearly insufficient, and we're also going to touch a word on that. For example, the foreign direct investment. So this is the part on the economy. If you can't really read those little things, I'm going to mention some of them a little bit further. But on the growing diversifying part, what is important? Obviously, the share of non-oil, the share of non-oil GDP in the total one, the share of the exports, non-oil exports in percentage of the non-oil GDP as well, the private sector contribution to the GDP, the foreign direct investment, obviously, as a share of GDP as well. Well, there is a target on the asset under management of the public investment fund. I'm not sure if it would mean a particular progress, but well, let's say it depends on the funding the government actually puts in place. And second leg of this thriving economy pillar is everything about employment and training, in fact. So we have a target on unemployment rate, and we have a big target which was mostly advertised recently about the women activity rate, participation of women in the labor force, which almost doubled ever since, and already exceeded the initial target that was put by the government at 30%, and that was revised to 40% subsequently. The same thing on unemployment rate. We are at the target of 7% after 12 in 2016, and the target was revised to 5%. So definitely kind of a success story. Well, I also put the share of the graduates on the job market within the 6 months, and here you see that the progress is a little bit less, well, visible. There is quite much of progress, obviously, but we're still, well, more or less midway through the planned way. So only 13% of graduates could find a job after graduation within the 6 months. This figure went up to 43% in 2024 or 2023. Really, those figures depend on the availability of data. And well, I didn't really put this information on table not to overcharge it. And the target is 75%. So 3/4 of students that find the job like 6 months within the graduation. So we're not quite yet there, right? Okay, and the two other pillars, the vibrant society and the ambitious nations, as I already said, some of the objectives are very difficult to quantify. Some of them are actually using some rankings, for example, environmental performance ranking or ranking of the Saudi cities, like in the most livable cities or something. Ranking on the government effectiveness side. Well, this is probably ranking that makes the most sense is the ranking in the UN e-government development index, and this is where they progressed quite much and almost at the target. So this is quite an impressive improvement as well. So I will not comment that much over here, and I will probably just end up this descriptive part with the giga projects. Well, probably going a bit ahead of my speech, starting from the fact that actually many of them are being recalibrated, and there is a process of prioritization among the projects that is happening, that is underway. Obviously, in terms of the budget, well, the initial budget was somewhere around $900 billion, but we already know that several projects exceeded that budget several times, so a couple of times, and finally the estimations go to much higher, up to $1.5 trillion, and well, quite a big chunk of this spending is supposed to be in NEOM, the one of the hugest futuristic project with the line, you know, the famous line, but finally, which was scaled down to scale back to something much, well, not, I won't not say feasible, but at least much less expensive. So I haven't really updated the planned budget yet, because in fact they're still in the process of reducing certain of reprioritization or recalibrating in this program. But the general trend that we might probably see is that for now the priority is clearly given to projects that are linked to the international, mainly sporting events. So you can see the Sport Boulevard Stadium that is going to be built for the 2034 FIFA World Cup. So you can see it in the lower part of the table, and you see that the completion rate is much higher than let's say on average, or the King Salman Park in Riyadh. Basically, apart from these projects linked to the international events, the infrastructure projects in Riyadh are also given priority. So probably as a showcase of more general progress. So King Salman Park was also given priority and is already completed at more than 60%, because this data probably are a little bit old. And another interesting thing on the Giga project is that the completion dates were moved for many of them beyond the 2030, as you see. So finally, when we speak about the 2030 vision, Vision 2030 project, we are not speaking about the firm deadline. So in fact, it's around 2030, but many infrastructure projects are going to be extended beyond, and I guess that will also give some flexibility to the government on the financing side, which is becoming more strained, as we will see just later on. So I already mentioned the two more or less success stories of the Vision 2030. So let's speak about the household home ownership rate. So this is one of the metrics that was revised to a more ambitious one because the level that they were actually trying to achieve by 2030 was already reached in 2020. So basically, the Saudi households home ownership rate. So we're speaking only about the Saudi nationals here. It was below the 50% in 2016 when the Vision 2030 was launched. And it reached the target of 60% in 2020. So that's why the target was revised to 70. And in 2024, the figure's at 65%. So quite an impressive progress. And well, pretty much all conditions are there for this program to succeed. It was one of the priority projects because finally, well, we've got the very young population of Saudi nationals. So if you look at the average age, is something like 25.4 with just the Saudi nationals, excluding the foreign workers. And I think around 60% of the population is below 30 years old, so below the age of 30. So definitely two things are the most important probably for them is the labor market, so jobs, knowing that the public sector jobs, well, which are clearly preferable by the Saudi population, are probably not available on such scale as needed by the population growth, and the home ownership, the housing. So the Saudi government put in place a huge number of programs to promote the home ownership, to make the housing affordable to the most fragile part of population, to revamp basically the financial sector in a way that mortgages become more affordable. And my colleague will speak about it in her part, but definitely the affordability of mortgages was one of the factors that lies behind this progress of the home ownership rate. And probably can't mention the fact that non-oil sector has been performing quite impressively despite the quite a significant decrease in the oil sector. So this is what you see on the right-hand chart. So we see much more stability in the non-oil sector in the latest year, growing at around 4% per year, and basically offsetting all the dips that we've seen in oil production. Although those dips were mostly mostly linked to the self-imposed oil output cuts by the OPEC Plus group. So I spoke about the jobs. So we can't really pass by the labor market improvements. So two metrics that everyone looks at. Well, first one is the unemployment rate. If you look at the Saudi nationals, so we passed from 12% in 2016 to 7% in 2024, and this was pretty much already the target, as I was saying, and the target was actually lowered to 5%. And if we look at the total unemployment rate, it's at the historically low 2.8%. So definitely something is happening here, and something quite significant. And the second thing is about the let's say opening up of the society, and especially in the part of the women rights. So participation rate of women increased quite dramatically. You see the Saudi Arabia, you see the lines from the average of the OECD, you see with the Middle East, and you see the Emirates. So obviously, Saudi Arabia is still below the OECD average, which is somewhere around 50%, and the latest figure was at 36 in 2024, if I'm not mistaken. So there is still way to go, but it's already quite a progress compared to a much lower figure, around probably 20% that we've seen in 2016 when all these changes on these modifications and modernization process just started. So just like other metrics, it was revised upward to 40%, if I am not mistaken. Yes, I think so. So probably just a little negative part on that impressive labor market. So I already spoke about the labor market reform. So obviously there is a huge progress that was made also on the different parts of the labor market. So the different reforms that were introduced to flexibilize or to make the job market more flexible, but at the same time introducing a bit more well, different types of insurance for workers, but also for companies. So on the legislative side, let's say, well, the work was also well, the progress that achieved was also quite impressive. But unfortunately, a big part of these jobs that were created and the big, well, and in fact, the highest growth in the sectoral terms is mainly concentrated in sectors that have always been dependent on petrodollars, on the recycling of this oil revenues. So we'll speak about the retail trade or the commercial center. We'll speak about obviously opening up of all the entertainment industry that also needs workers, so restaurants, hotels, all the hospitality. So as you see on the left-hand chart, this is the sector that increased the most in 2024, and obviously there is a certain probably skill mismatch, as many people are going to work in this sector and that are not probably Saudi nationals, and Saudi nationals pretending to probably a bit more sophisticated jobs for which they don't necessarily have the right qualification. And we're gonna look why on the next slide. And just to as an introduction to the next slide, one of the main problems as well why this diversification out of the oil revenues is so difficult is because the labor productivity of Saudi Arabia is rather low. So you can see on the right-hand chart, Saudi Arabia compared to the US and to the average in the world. And you see that while there are moments when it's increasing, but basically the trend is negative and much more negative than in the rest of the world. We have several explanations why the private industry, why the manufacturing is not competitive. So obviously the productivity, obviously the currency peg that is not allowing the Chinese way, let's say, to depreciate their way to competitiveness. But still, if we look at the let's say qualification, so in terms of the educational attainment, the latest PISA scores, well, the scores of the school children in mathematics, reading, science that were measured in 2022 are much lower than the OECD average, well, in Saudi Arabia than the OECD average. And also they're much lower than in the neighboring countries, even Qatar and the Emirates. So there's definitely quite a catch up to do in this part. And Saudi Arabia is acknowledging that, and they were also putting in place quite a huge overhaul of the educational system. But obviously it needs time to bear fruit. Second part is probably more on the total factor productivity growth. So we have the labor productivity and we have the total factor productivity, which is usually explained, let's say, by other factors than capital, labor, and the productivity of those factors. So basically something linked to innovation, to the way of doing business, to the optimization. And on the right-hand chart here, you see that the yearly average growth of this total factor productivity was pretty much negative since between 2011 and 2023 in Saudi Arabia. It was pretty much negative in the rest of the GCC region, apart from the Emirates, unfortunately. And it's only 2024, and it's still a forecast. It's not a realized figure that we are expecting it to be a little bit better. Well, according to the conference board calculations in Saudi Arabia. So some progress is made, but well, definitely probably remains to see if at first the figure will be realized, and second, if it's sustainable. And just to comment on that part, there's a little table on the left-hand side of the chart. So the R&D expenditures as a percentage of GDP, Saudi Arabia is more or less at the average of the GCCs. It was below in the previous figures. So we can already see a little bit of a progress, but this progress is really insufficient if we compare to the averages of the OECD, especially the US, obviously, which is investing the most in terms of R&D, but even Europe. So 0.6% is much lower than even European above 2%, or even like not speaking about the US with the 3.6% growth of the R&D, not growth, sorry, of the R&D expenditures per year in 2022 in percentage of GDP. So basically, just to conclude this part of the problems on the labor market, basically, well, so they managed to solve probably the low-hanging fruit of expanding the labor force by making women a bit more active on the job market, by modernizing the society, by opening up and well, let's say liberalizing certain parts of it. But productivity remains quite low, first because of the qualification issues of the local labor force. So as we say, as already said, low educational attainment. A second, still pretty low integration of new technology in the industry, insufficient R&D spending. It is changing, obviously. We hear a lot about different digitalization, e-government, etc. Initiatives that have been taken by the government, but obviously this probably will also take time to realize. And just a little word on the economic diversification. Well, we already spoke about the oil and non-oil GDP, that it actually was the driving force of the growth, or the growth was much slower because the oil part was pushing it down. But basically, if you look at the PMI indices, they are quite strong in Saudi Arabia, and just put for the comparison the Emirates that are even lower that been even lower lately. So showing that the non-oil sector of the Saudi Arabia economy remains rather resilient. Also, in terms of the economic diversification index, if we compare it with the previous year, certain progress was made by Saudi Arabia in line, let's say, with the rest of the world. It's probably not the most diversified economy. Emirates is definitely more, but unfortunately, the negative part here is that the dependence on oil is and gas is still quite significant. So this is the chart that I took from the Article 4 IMF report that I found very interesting, that is comparing basically those blue histogram showing the Saudi Arabia and the red dots, the GCC average excluding Saudi Arabia, and how the nominal GDP is dependent on the oil and gas sector. So in Saudi Arabia, we see it decreased, but it didn't decrease that much. So, for example, in exports, we're still pretty much at 80% dependency, at 80% dependency on the oil and gas exports. So definitely, diversification is underway, but the reliance on oil is probably still too high compared to what it could be. We're not speaking about diversification away from the oil completely, but it's still pretty much high. And as we already explained, certain achievement of the Vision 2030 were actually dependent on the oil revenues and the way the government is recycling that, and the way the government is creating consumer demand, for example, by redistributing those revenues via the subsidies or highly paid public sector jobs. And here we come for the reasons why the progress been slow. So, well, we spoke about the productivity constraint, but another constraint is the role of the government. So, first, role of the government as the main financing force of all the changes. So, obviously, well, the budget deficit, the budget balance has been in a deficit since a while, and we see that the current account balance also passed in a deficit, which is basically a situation of the twin deficit, rather unusual for an oil exporting country, especially if it's going to last. We would say that the external position of the Saudi Arabia is not fragilized anyhow, so they still have quite a significant international reserves. So you can see on the right-hand chart, the external debt, total external debt of all economic agent doesn't exceed or probably somewhere around 30% of the GDP, which is definitely not much. And even the public debt is also somewhere around 30%, which is much lower than in many other countries, including some of the GCCs. But definitely they will have to do something, right? So they will have to restrain probably the level of the subsidies. So you see how much it costs to them, those explicit or even some implicit subsidies for the population. They will have to do something about it. And we already spoke about the giga projects. One of the main vehicle, the Public Investment Fund, already announced a decrease of the budget on the projects in 2025 of 20%. So definitely some scaling down is underway, as we said. Despite the fact that the government was planning to increase quite significantly the fund's asset under management, and they already increased quite significantly, almost well more than 4 times, I think, in the past 6 or 7 years. But somehow, in terms of the funding, there is a bit of a strain as well, and that is why Saudi Arabia is doing everything to attract the foreign investment. But if we look at the foreign investment metrics, we see, for example, the portfolio investment went down quite significantly lately, and the foreign direct investment never really picked up at the pace that was planned, or that was at least hoped by the government. So we're somewhere around 2%. This series was actually revised a little bit upward by the government statistic authority, but even after the revision, it's still below the target of 5.7% that they would like to see in 2030, and that might probably be missed in reality. And that said, they still have improvements in different business rankings. So somehow some progress is happening, but apparently the foreign investors, they're still wary of, let's say, the need to get some political connections and the reputational risk that it can, imply if you want to do, business in Saudi Arabia. Sometimes it's the legal framework that is not fully established, notably for the foreign ownership. We've seen yesterday the news that they're going to allow the majority holdings on the equities, on Saudi equities, and apparently it's supposed to boost the market capitalization. So we'll see how it will. If it will be finally passed, because it's not the final decision yet. And if you looked at the PIF, for example, the sovereign fund projects that it's financing, in fact, some investors are questioning the viability of those projects. So sometimes PIF financing projects that didn't really need financing from the very beginning, and sometimes it's financing probably the projects that are not completely viable. So there is probably a bit of cleaning that might be needed on that side too. I'll probably stop here. There's plenty of things to say. Very hard to speak about everything in such short period of time, and I'm already too much over time. So let's say they made a certain certain successes, and the most important of which was the successful swift transformation of the society, the opening up. We say that society was ready for this social revolution that was brought by MBS, and that actually allowed liberalization of the labor market and everything else. Tourism and internal tourism, labor market, construction, and even some potential for mineral extraction. Well, it's not a part of the Vision 2030, but something we speak about. Definitely a lot of challenges are still ahead. So we spoke about the fact that the private sector is still rather small. So the manufacturing sector is not completely competitive. Productivity is a bit of under strain. The oil dependence is still high. And on the financing part, the persistent deficits on the budget will probably increase the need for foreign investment. That unfortunately remains quite limited. So I'm going to stop here, and I'm going to let the floor to Bouchra to speak about how they finally could finance it using the market and the bank system. Thank you.
Thank you, Ina. Good afternoon, everyone. Yes, indeed. One of the major questions is how Saudi Arabia could finance these projects that are part of Vision 2030, and how the financial system could support the country in executing these projects. So. In this section, I will provide an overview of the financial sector, mainly the banking sector in Saudi Arabia, and the funding tools used to support this expansion. Here on this first slide, we have the evolution of total banking assets in the country. And actually, one of the key pillars of Vision 2030 is the financial sector development program, which aims to strengthen the domestic financial sector so it can support the long-term growth objectives of the country. And some of the targets of this financial sector development program include growing banking assets to 4.6 trillion Saudi riyal by 2030, which is equivalent to around $1.2 trillion from 2.6 trillion Saudi riyal in 2019. Actually, the Saudi banking assets achieved this objective in 2024. And as we can see on this slide, total banking assets of Saudi banks stood at around $1.3 end of the first half of 2025. This represents more than 60% increase compared to 2020, and the Saudi banking market is becoming one of the largest banking markets in the GCC region, slightly behind UAE in terms of total assets, and it represents almost a third of total assets for the region. And actually, the loan growth has been the main driver for banks' asset growth, and we can see this on the next slide, please. We had a steady growth in the lending activity in the 5 recent years. We have the total loan book that achieved around $850 billion equivalent in the first half of this year. And this significant growth is definitely related to Saudi Arabia's Vision 2030 strategy and its related projects. And here we have the breakdown of the loan book, where we can see that retail lending represents around 44%, of which we have 22% of mortgages loans and 22% of consumer personal loans. And the public lending represents 7%, and the corporate lending, it represents the bulk of total loan book with a share of 49%. Actually, the share of public lending may look small, 7%, but it's the direct lending only. And I would say that many corporates within the corporate scope, they are backed by the government. And also what is important to bear in mind is that banks, they hold a large part of sovereign bonds, mainly domestic sovereign bonds, which represent around 13% of their total assets. So we expect this lending activity to continue to grow on both corporate and retail segments to support the execution of the Vision 2030 projects. And when we compare actually this loan growth to deposits growth on the next slide, we can see that actually loan growth is outpacing deposit growth since 2020. So when 2020, there was a strong increase in loans driven by mortgage loans during the low interest rates environment, and also the launch of some initiatives by the government to enhance home ownership. So deposit growth is clearly lagging behind. And in the chart on the right side, we can see here we have the share of demand deposits, or what we call CASA deposit, and those that don't bear interest. We can see that the share of these deposits is actually decreasing over recent years in favor of time deposits, which are interest-bearing deposits, and the share of this interest-bearing deposits, it increased from 24% in 2020 to 38% in the first half of 2025. And we have around 45% of these interest-bearing deposits that come from government-related entities. So this increase in the share in interest-bearing deposits highlights potential liquidity tightening for Saudi banking sector and the need for funding diversification to catch loan growth. On the next slide, we have here on the next slide. Here we have the evolution of the funding profile of Saudi banks, and actually Saudi banks, they have historically funded their balance sheet with deposits, but we can see here on this chart that the share of deposits in total liabilities is decreasing from 65% in 2020 to 60% in 2025, and the reliance on wholesale funding is increasing over the recent years. And again, here this is mainly due to the loan growth that outpaced deposits growth, which is highlighted by the strong increase in the loan to deposit ratio of Saudi banks. So here we mentioned the headline loan to deposit ratio, which is the total loans over total deposits, and this headline loans clearly exceeds 100%, but the regulator, actually the central bank, provides an adjusted loan to deposit ratio, which is actually the regulatory one. And the regulatory adjusted loan to deposit ratio, it allows banks to include some of deposit instruments in some of debt instruments, mainly capital instruments, in the denominator. So banks are allowed to maintain an adjusted loan to deposit ratio below 90%, and here we can see that this regulatory loan to deposit ratio of Saudi banks is within the limit, like it stands at around 82%. So it's clear that Saudi banks, they are needing liquidity to finance growth, and they also need diversification in their funding sources. And this explains the strong increase in debt issuances that we observed in the Saudi debt market, and we will see on the next slides. So here we have the evolution of Saudi debt capital markets, the issuance volume by all type of issuers, mainly the government, the corporates, and also the financials. And we have the total issuance volume by Saudi issuers that achieved around $86 billion equivalent on year-to-date basis, and this includes around $30 billion equivalent of debt issued by the government. Actually, the government has a domestic sukuk program under which they issue public auctions in their domestic currency, Saudi riyal, and they also issue around they issued around $10 billion equivalent since the beginning of the year. And the government, they have also an international bond issuance program under which they issue on hard currencies, mainly dollar, and this year they issued around $20 billion equivalents in both in dollar and euro currencies. We have the sovereign fund, the public investment fund, is also becoming a regular issuer in the debt market since 2022, and issue both conventional and sukuk markets. And we also have debt issued by financials that strongly increased this year, with the total of around $35 billion equivalents, including senior, subordinated, and also certificates of deposits. And actually, Saudi banks, they have been quite active in the debt markets since the beginning of the year. We can see this in the last slide. And actually, they issued. We see a strong increase in subordinated debt issuance, mainly additional tier 1 and also tier 2. So they have been quite active also on short-term papers, those certificates of deposits. They issued around $14 billion equivalent of certificate of deposits since the beginning of the year, which confirms again their strong need for liquidity. And in our view, this debt issuance momentum, especially on the subordinated issuance, it should continue for the rest of the year and is likely to persist beyond for different reasons. The first one is the need for liquidity to support the lending growth, and the second is to strengthen their capital buffers because of regulatory capital requirements that are increasing in the Saudi banking system. And actually, Saudi banks, they are well capitalized. The bulk of their capital adequacy ratios, they are composed of high quality capital, which is CET1, but they still need to optimize their capital structure. And I think that a decrease in interest rates will help them to reduce their cost of funding and also achieve a well-balanced funding mix. And that's it on my side, Ina.
Thank you, Bouchra. So basically, we're seeing that lending growth has been really strong, and banks are actually were almost taken by surprise by all these credits asked for different Vision 2030 projects. And finally, that's probably the main problem is that the loan growth is so fast that it's actually exceeding the deposits, the dynamics of the deposits, and that's why all this talk about the external funding, mainly for debt issuance for banks as well, but not only, but for the government on the PIF. Question would be probably: are banks solid enough to support this growth and debt increase in the medium term perspective? Are there any risks on fundamentals?
Actually, that's a good question. Actually, the Saudi banks' fundamentals are sound. They are good. They are well capitalized with capital adequacy ratio that are above 19% on average, according to CEEMEA. And the profitability is good. The asset quality looks healthy with NPL ratios that are among the lowest in the region. It's almost less than 2%. But I would say that this strong growth in lending will definitely expose the sector to some potential vulnerabilities. For instance, possible deterioration in asset quality, maybe not before 2030, but I don't think they will let massive defaults occur before. Otherwise, they will struggle to borrow and raise funding. But here I would say that the best indicator maybe to watch in the future, it will be the provisioning trend of Saudi banks in the coming years. And another point is that they operate in highly regulated environment. The central bank, CEEMEA, is monitoring closely the fundamentals of the banks with stress tests and high regulatory requirements. And on the funding, I don't see that this increase in external debt is a major concern so far, as long as it still represents a very moderate share of their total balance sheet so far. But I will ask you the same question, Ina, regarding this increase in government indebtedness that we've seen. Is it something to be concerned about for the country, for Saudi Arabia?
And it's very interesting because I see a question from the public that is a little bit on the same subject, and they're asking if the FDI shortfall compared to the government plans will add to actually the state's indebtedness ratio by 2030, and if we see it above the current IMF projection of 46% of GDP. Unfortunately, it's very hard to put. We are not making scenario in the longer term perspective. Our scenario horizon stops after 2 years after, but it will definitely depend on a number of factors. So obviously, the FDI shortfall is estimated quite significant numbers by the IMF. I would probably say that they are already trying to fine tune, the legislative part to make it a bit more attractive, for foreigners to invest. So probably FDI shortfall will not be that strong by the time we arrive to 2030. Second, the level of the debt that they will have to raise on the market will also depend on the oil revenues perspective, definitely, and not only on the prices themselves, but also on the amounts of oil they're going to pump at this moment. So unfortunately, it's a little bit. And on the third factor, it will be the projects themselves. We spoke about the calibration. We spoke about the downsizing of certain projects, reprioritization that will most probably continue. And in fact, when we asked, will they manage, they have so many things, all these sporting events, the social contract, these young Saudi nationals asking for jobs, asking for revenues. So how they're gonna, manage all of that? We think that the only way to manage that is kind of finding an equilibrium between, the recalibration and reprioritization of projects, between the finding the financing options, especially as the Fed is as the interest rates are going to be down by the Federal Reserve, and as there is a currency peg, the Central Bank of Saudi Arabia will definitely follow. So the cost of funding, as Bouchra was saying, will be definitely going down. So it will allow them probably to increase, the level of the debt, but probably the cost of this funding will be more advantageous. So hard to say at what level it will start to represent a significant risk. IMF projects on 46%, starts to be probably a little bit worrisome than the current levels of a little bit below 30, but definitely it will keep growing. I think we will stop here. We already over the time. We had another couple of little questions, but I guess we'll not be able to answer everything. Thank you very much to all speakers. Don't hesitate to download 2 papers that we published, and we're going to publish the second one shortly in the next days. So they will probably give a bit more color, a bit more details and examples on what we spoke rather quickly finally today, even though it took us a bit of time. So thank you for listening. Thank you for your questions, and see you next time. Bye-bye.
Thank you very much.
Thank you.